I believe dividend investing is one of the best ways to build long-term wealth. For the last 3 years, I've been putting this to the test. I'm Nick, and this is the Dividend Growth Income channel. In today's video, I'm going to give you a transparent look at a dividend portfolio we started with just $100 3 short years ago. And today, it has built a foundation that is paying me growing passive income. That's right, we are celebrating the 3rd birthday of the Dividend Growth Income portfolio, and I am excited to show you how far things have come in 3 short years. But first, this video is for educational and entertainment purposes only and should not be taken as financial advice. Dividend growth investing is not a get-rich-quick scheme, and there are no guarantees of returns. Investing in the stock market involves risk, including the potential loss of principal. I am not a financial advisor. I am simply sharing my own personal journey as a dividend growth investor. If in doubt, always seek help from a licensed financial advisor. So first, a little bit of background. I wasn't new to dividend investing when I started this account. I'd been investing in my retirement accounts and following a dividend strategy for a while, but then I got through an ugly divorce that changed some realities for me. This portfolio serves 2 purposes. First, it's a portfolio that I built publicly for this YouTube channel so that we could document the growth together in real time. The good, the bad, the ugly. You're seeing it as it happens. Second, it marked a new chapter for me personally as I settled my divorce and got my life to a place where I could focus on the things I truly want to do. And dividend growth investing and talking about dividend growth investing is a huge part of that. So when I started this channel 3 years ago, I also opened a brand new account at Fidelity. I added $100 and used it to buy a few ETFs. Now, why did I choose Fidelity? As investors, we have a ton of choices when it comes to brokerages. I actually use several platforms myself, but for this account where I'm dollar cost averaging every week or every month, I wanted a platform that made fractional share investing simple and straightforward. For example, I buy a lot of VOO. This is an S&P 500 index fund where the share price is north of $600. So instead of needing to save up $600 just to buy a single share, I can simply tell Fidelity I want to invest a set dollar amount. So say if I put $50 in, Fidelity will buy me the exact fraction of a share that amount covers, which right now would be about 0.82 shares of VOO, 8.2% of a share. This has been a game changer for smaller dollar investors like me personally because it lets us dollar cost average consistently without waiting around to afford a full share. Fidelity makes this process very simple. Their iPhone app where I do the majority of my purchases has gotten a lot better over the last 3 years and is now very simple and intuitive to use. So overall, very satisfied with Fidelity. Just to be clear, my channel is not sponsored by them in any way. It's just a platform I personally am using for this account, and I'm happy enough with it. So I'll leave a link to the video where I made those very first purchases, if you're curious. It was back on September 16th, 2022, where I invested $100 and split between 3 ETFs. As I mentioned earlier, we have VOO. It's my core S&P 500 index position. But because this account is focused on dividend growth, I've also included 2 dividend-focused ETFs. That's SCHD, the Schwab US Dividend Equity ETF, and VYM, the Vanguard High Dividend Yield ETF. To this day, these 3 ETFs remain some of the strongest weighted positions in the portfolio. They've been the foundation since day one, and I love the instant diversification they provide. As I'm building this out, I've also set some concrete goals for the dividend growth income portfolio, or maybe we ought to call them milestones. The ultimate goal for this account is to generate $2,000 per month on average in dividend income, which works out to $24,000 annually. If this account can give me at least that much, it will make a nice contribution to my overall retirement. The goal is still several years away. In fact, I have a video coming out projecting exactly when I think we're going to hit this, and that's going to be coming out in a few days. But I've set up a series of milestones to track along the way and to show that this is a realistic goal with consistency and patience. Right now, we're about 5.5% of the way to our ultimate goal at just 3 years in. We've already crossed some major milestones. Most notably, this account is now paying over $100 per month in dividend income on average. And our next milestone is to reach $5 per day in dividends, and we're already about 72% of the way there. In a long-term portfolio like this, setting these fun incremental goals is a great way to stay motivated, because let's face it, this is a long journey, but it makes the journey more fun to follow. Speaking of which, if you want to keep following along as we build this dividend portfolio together, tap that subscribe button and leave a quick comment even if you just want to say hi. It really helps more people find the channel, signals to YouTube that this is content worth sharing, especially since they have been giving my channel a hard time lately. Okay, so let's take a brief look at the last 3 years and follow the growth of this account from the very first $100 purchase to where we are today in September 2025. So in addition to that first $100 I put into the ETF in September, from that point forward, I began adding fresh cash to the account every week. For the first 2 years, I never missed a week. I always added something to keep the snowball rolling. It started off slow in 2022. Over the last 4 months of that year, I managed to contribute $2,950. And by year's end, the account was valued at $3,067.44. So that's about a 4% gain. And it included just $12.81 in dividends collected for the entire year of 2022. And most people would probably look at you at that point and think, Nick, what the heck are you doing? The forward annual income, that's the amount that's projected to pay out, ended 2022 at $96.46, just under $100. It's a very modest start, but we've all got to start somewhere. And this is the hardest stage, right? Definitely takes having a little faith in the process. And this is normal before getting your first 10K invested. So what was I buying? At this point, I had 3 ETFs and I had a selection of about 20 hand-picked dividend growth stocks. These were companies I'd researched and believed in for the long term. These companies have solid track records for boosting their dividends year after year. So in 2022, I was buying everything in roughly equal dollar amounts, just trying to get the foundation in place. So then we go into 2023, and I really put my foot on the gas. I contributed a total of $14,400 over the course of that year, which worked out to be just over $1,200 per month, roughly $300 every single week. 2023 was a bit of a roller coaster for the market, but by the end of the year, the portfolio posted just over 8% in performance gains and paid me $337 in dividend income. We finished 2023 with an account value of about $19,000 and a forward annual income of just under $600, which meant this account was now paying me almost $50 a month in average dividends for its first full year of having the account. This was a huge milestone and a sign that the snowball was already starting to roll. I considered 2023 a big success for getting this portfolio off the ground, and I know many of you discovered the channel and started following me during that year, so 2023 was a special year. Then going into 2024, I committed to doing even better than we did in 2023 to accelerate things, and I did manage to outdo myself on contributions, adding $15,650 in cash. That's about $1,300 per month into the portfolio. So by 2024, the foundation was in place. Instead of just dollar cost averaging across everything, I started becoming more opportunistic. When I saw a good opportunity, I would add more to that position. If I didn't see any compelling opportunities, I kind of focused more on the ETFs, building those up, and also what I consider the foundational buy and hold forever stocks. Also, as I learned in my investing career, there's no company that's truly untouchable. Sometimes trimming or selling is going to be the right move. And 2024 turned out to be the strongest performing year yet for the portfolio. In addition to more than $1,500 in contributions, the account saw roughly $4,600 in gains, a combination of capital appreciation and dividends. We earned $845.34 in dividends for that year, smashing the $337 we earned in 2023. And we wrapped up 2024 with an account value just over $39,000 and a forward annual income of $1,074 heading into 2025. And in 2024, I also sold out of some of the higher yield positions in the account, like at AT&T and Kinder Morgan and Best Buy. I think those are the 3 I sold out of that year. AT&T had cut its dividend, and this group of stocks was just starting to look more like high yield plays than dividend growth investments. And I made the call to part ways with companies like that. And while AT&T has run up since then, and I probably sold out a little too early, I still think the decision made sense for the long-term focus of this portfolio. And going into 2025, I started feeling a stronger desire to consolidate some of my holdings. I think I simply had too many positions, and I still do. So far this year, I've sold a few more stocks, including Comcast, and more recently, I let go of Starbucks, along with a couple others, and I'll be covering these details in my September portfolio wrap video, which will be coming out later this week, so stay tuned for that. 2025 has also been a year where I scaled back my contributions compared to the more aggressive pace I had in 2023 and 2024. I instead started prioritizing some other areas of my financial plan. I increased my 401k contributions to get that full employer match, which is just a no-brainer. And I started funding a healthcare savings account, which is another great tax-advantaged vehicle. I've also been maxing out my Roth IRA as usual. I've done that every year for the last, I believe, 5 years now. So those 3 accounts do take priority over this taxable portfolio. So when I need to scale back somewhere, it's probably going to hit this account first. On top of that, I had a few unexpected financial expenses that paid my attention this year, a few weddings I had to go to this summer, so 2025 has just been a little more expensive. Even so, I still have been getting about $600 per month in contributions so far this year, and the market has been kind to the portfolio. Again, we're up close to 7% on the year. Dividends have been strong too. We've collected $861 so far through September, which already surpasses 2024's total, and we still have SCHG's payment coming, and I expect that's going to be over $900 to end the month of September once we get there. The portfolio is now valued right around $48,000, the forward annual income of more than $1,300. This is well more than $100 per month in dividends, a milestone that we passed back in April. And check this out, over the last 3 years, the true gain on these investments is about $9,500, which I'm pretty darn happy with. That works out to roughly a 25% gain on my total contributions from just $38,000. And we also collect more than $2,000 in dividends along the way, every single one of which have been reinvested to keep the snowball rolling. So that 25% gain, that works out to better than 8% performance every year so far in this portfolio. Not too bad, right? Looking ahead to 2026, my plan is to get contributions back up to $1,000 to $1,200 per month, which is more in line with what I did the first couple years. And I'm likely going to consolidate the portfolio a little further here in the next few months and to continue leaning heavily on the ETFs, as that is the core of the account. And so the fourth year of the portfolio, I'm going to cross that 50,000 mark. It's another milestone I'm looking forward to celebrating with you guys. I should also mention that every dividend we collect right now is automatically reinvested right back into the stock that paid it through DRIP, Dividend Reinvestment Plan. It's a simple, hands-off way to keep every dollar working for you. As the account grows, it might make sense to start taking dividends in cash and reinvesting them selectively, but I don't think we're quite there yet. That's actually how I do manage my Roth IRA currently. Both strategies are valid, just depending on your goals. We're definitely due for a full position by position review of this portfolio, where I'll go through all the stocks and share my outlook going forward on them. YouTube taking down the first version of this video last week. If it seems similar to something you watched a few weeks ago, I do apologize. But it did force me to make a few changes, and we'll be getting that deeper dive video out as soon as we can. I do have a few in the can ready to go. And one of the core stocks in this portfolio is Chevron, ticker CVX. And if you want to know why I prefer Chevron over its big oil competitor, ExxonMobil, click into this next video where I break down exactly why. So thanks so much for sticking around. You are my people. And until next time, keep investing. Not financial advice.